What is going on, everybody, and welcome back to the OBR YouTube channel. In this week's video, we are doing the top stocks to watch for the week of May 16th. And in this video, if you are new or unfamiliar with the series, what we do is we go into our favorite technical setups in this upcoming week, the fundamental drivers you need to be aware of, and the earnings in the S&P 500 so you can stay away from those risky earnings plays. Without any further delay, let us get right into this week's video. So we are back on our favorite fundamental drivers webpage, forexfactory.com, and as you can see, we have no news this week besides Tuesday at 8:30 a.m. when we have core retail sales and retail sales for the US coming out, and at 2 p.m. Fed Chair Powell speaks. Besides that, no other news in this upcoming week. And as you can see on screen right now is our earnings in the S&P 500 for this week as well. All right, guys, we are going to be starting on the S&P 500 Index ETF, also known as SPY, and we use SPY as a general gauge for market sentiment. Also, if you're not familiar with LA Wave Theory, I'm going to be linking our last LA Wave Theory video in this corner, all the way up there in the corner, to showcase what it is we are talking about in this video. I cannot go into in depth because we'd like to keep these videos short for you guys, clear and concise on our beautiful weekends, so you can spend more time doing what you need to do, getting refreshed for the week. But regardless, the overall principle that we are looking for is a 5-wave move to the downside or upside, right? A 5-wave move followed by a 3-wave corrective move. So if we go to the 4-hour chart, it'll be a little bit easier to see, but we just on this last week reached our first take profit zones for S&P 500 ETF SPY at 395 and 391.50, following a 1, 2, 3, 4, 5-wave move like we were just saying. And now we are looking for that 3-wave counter trend correction, which we refer to as our ABC waves. So we are looking for ABC waves to play out on SPY now. On the 1-hour chart, we can see that a little bit easier. On Friday, we had wave A. We were looking for wave B to play out and wave C to play out as well, as you can see by these dotted lines. For wave C, I am looking for a wave C to end around the 405 range, potentially on the extended end all the way up to 410. At that point, I'll be looking to get longer dated puts or short positions rather. And through that, I am expecting another wave to the downside on most things, as you will see in the rest of this technical analysis section of this video. But SPY, I am expecting a little bit of bullish momentum. Something to be noted: this market can stay irrational longer than you can stay solvent. It can stay oversold much longer than you can think, and it can change on a dime. So while this is the most probable wave count right now and the most probable thing that will happen, nothing is positive, nothing is certain. We may continue our corrective wave and on Monday make new lows. We are just weighing the probabilities right now, and the probabilities say we will have an ABC correction play out to the upside now, 405 to 410, and then a move to the downside. All right, moving into Apple. We're talking fast, we're getting it done. So for Apple, we're looking for the same exact thing, right? We had our 5-wave move to the downside. We were looking for A, B, C, right? ABC corrective move. Wave A played out on Friday, just like we saw on SPY. And I'm looking for wave C to end at 149.60 or perhaps up here at 151.50. At that level, I will be looking to get longer dated puts to continue us to the downside, because we do have some extended profit targets at 129.50 to 126.40. So keeping an eye on those levels, looking for our ABC correction to play out, and then a move to the downside. You guys got the gist. And as you will notice, it is the same exact thing on QQQ. I'm going to sound like a broken record player. But 5-wave move to the downside, as you can see here. 1, 2, 3, 4, 5. ABC correction move. We're looking for a move up to 310, perhaps up to 318, before we continue to the downside. So yeah, we are looking for a move to the downside, but again, just like on SPY and Apple, perhaps a move to the upside before that happens. Especially because we just reached our daily take profit levels on QQQ at 296 to 289. In Tesla, again, you guys could guess it, 5-wave move to the downside. Looking for our wave 4 to play out right now, which is going to play out in an ABC format. Looking for a move on Tesla to fill this gap, potentially up 850, 856, and then move to the downside to fulfill our take profits at 650 to 600. At that point, the correction will most likely be looking to stall or perhaps even finish, and then we can look for positions to the upside, but definitely bearish on Tesla after a little bit of some bullish correction. We refer to those as bear market rallies, counter trend moves, whatever you want to refer to it as. On AMD, we recently got down to our first take profit level at 86.50 and made a double bottom, as you can see. One test here, two tests here, moving back up to our $100 level. It seems if we get a daily candle close above 101, fill this gap, then I will be perhaps looking bullish, but until we do that, AMD definitely looks bearish. But keeping an eye out for these take profit levels still, and looking for a move down to 80.40 in the next couple of weeks. Oil is looking very good. We were looking at this last week, and beginning of the week we definitely got hit hard, and we did recover quite nicely on oil. It looks like we could bounce off the top of this resistance line, or perhaps we break and continue to the upside. I do think we break and continue to the upside. Once we do, whether it's now, next week, whenever it happens, I am looking for a move up to 125, so I'm bullish on the energy sector and oil, which, as you can see, we do have Oxy down here. We'll get into that in a minute. Bank of America is in a very clear corrective pattern. It looks like we can move to the upside. You know, we may not do this immediately. We may bounce around a little bit, but ultimately, once we break out of this corrective pattern, it does look like we will make a move up back to the $40 range, perhaps even up to the $45 range on Bank of America. So I am bullish if we break out. If we break to the downside, very bearish, and we'll most likely see $30 very quickly. KISHAN, I think this is a terrible stock. I think KISHAN is an iPad on a bike. It is terrible. I think it's going to $8. Right now, I'm looking for a move up to $17 to $18 for a continuation trade to the downside. This will line up with SPY, Apple, QQQ. Everything will line up for this trade. KISHAN will be, in my opinion, a relatively easy short opportunity. The stock has been doing nothing but going down over the last year. So, you know, keep an eye out for this. Overall, definitely bearish on KISHAN. Oxy, a Occidental Petroleum Corporation, made new highs, breaking back above our resistance, and it looks like we will follow oil, WTI, and continue to the upside. This is something that Warren Buffett has been buying a lot of. This is something that CODY, one of our OBR analysts, has been buying a lot of. I personally love the Oxy chart. I think Oxy can get to $70 to $80 relatively easily, especially when oil breaks out. So keep an eye out on Oxy. An energy sector in general, can't speak today, in my opinion, will appreciate, will go higher. So keep an eye out for that, especially while the market continues to trend lower. All right, everybody, I hope you enjoyed this video. I hope you pulled some value out of it. I hope you learned something that you can take into this upcoming week. If you like this video, please like and subscribe. Everybody at OBR will be incredibly indebted to you. And as always, on behalf of everybody at OBR, the OBR investing team, happy trading. We will see you in the next video, and have a fantastic rest of your weekend.